It's human nature to get a deal and then wonder if maybe you can get a better deal. Now, the same goes from the doom factor. If things are a little bit bad, could they get worse? And all that ties into the simple question, how low can the price of gold go? And now that the initial excitement of getting a deal on gold is starting to wear off, I guess we're left with the question of how low could it go? Could it go to $1,600 like some people are saying? Well, I don't know those people personally, what's in their heads, but there isn't really any data backing that up, or at least not hard data. No pressing reason for it. It's not saying it hasn't happened in the past, and we're going to get into that. I'm going to show you why it's not a crazy number. But I don't think it's really actual analysis. I think the price of gold is going down, so people are wondering, well, how much further could it go? We've seen it drop 10% from its high in May based on a number of factors, really, and the key being the Fed's higher for longer instruction on interest rates. But really, it probably had more to do with the U.S. economic data coming in looking like it just didn't care. I think that's what started the fall. That and the absence of central bank purchases to prop it back up. Now, the feeling is that down is the trend. Key there being feeling again, because there really isn't any fundamental reason for it to go lower. And I'm going to back that part up too, but really what we're looking at right now is probably an issue of liquidity. We're going to take a look, though, at some of the levels below the price of gold today and just kind of consider how low it could go. So let's start with last year's low. In 2022, we saw gold price fall into the 1600s. That was in September, and it more or less stayed there until November. The low was somewhere in the teens, like 1618 if I remember right, but it depends on what number we use. The lowest closing price that we're looking at here is like 1628. Now, that was only 12 months ago, but a lot of us have probably already forgotten how low it went. So simply by way of recent history, we could say it's feasible to get back to the low 1600s. Now, I'm not going to go into technical analysis here, but I will show a chart of the 30 and 200-day moving averages for gold over the past 2 years. I just grabbed this from Kitco, nothing fancy, obviously. We can see here the 30-day line in blue is trending down, of course. The 200-day line in green is still on its way up. And the intersection of those two lines, with short-term moving average pushing below the longer-term moving average, that is called a death cross. Very dramatic, I know. Again, I'm not going to dive deep into technical analysis, and if I was, I probably wouldn't be using this particular chart. But if we go back to the last time this happened in July of 2022, well, you can see what happened to spot price following. Now, realistically, technical analysis on its own is not worth much, but traders and trading algorithms do use it to inform their trades. Now, none of this is saying we're going back to the 1600s for the next few months. It's simply to show what could happen. I think I mentioned earlier I was going to show that idea wasn't crazy, and that's really all I'm doing here. I just made a video saying that gold hit that 10% drop trigger that I use to wake me up to start buying more. It went off Wednesday at 1:18 Eastern Time. Actually, went off a few days ago. That's a joke about the FEMA emergency alert that we were all supposed to be worried about. Well, my notification hit when gold dropped below $1,836. I have another notification set up that is at $1,734. And if those numbers seem meaningless, well, $1,734 is a 15% drop from the $2,040 high that we saw in May. And $2,050 is probably the better number. Maybe I was being conservative. Regardless, though, for me, these notifications aren't about finding the bottom. I just use them to help find lows to increase my buying frequency. So I've thrown out some pretty low numbers. $1,734, that's my 15% drop, and $1,628, it's last year's low. And hopefully I've been clear here that I'm not saying we're going there. There's just no way that I could know. But if we're thinking about how low gold could go, well, these numbers are as fair as any. It's really a matter of whether we should be buying hard now or waiting for further drops, and that's all guesswork. It's probably a little bit about the numbers, though, in one sense or another. $1,628, that is 10% lower than gold's spot price today. So if we were to wait, try to hit that number before we started buying, well, we would save $200 on each ounce of gold. And if we just waited for that $1,734 number, again, that's just something I kind of made up. Well, that's 5% lower than where we're at today, and we'd save $95 or so. And those are both significant savings, but everything I've shown, everything I've said is simply a what if. And we're thinking through short-term moves here. Well, the numbers could go the other way too. This is exactly why I have those percentage triggers in place. Now, really, the only reason I run through this kind of thinking, considering how low this stuff could go, is that I don't really get excited about gold prices over the short term. It's meant as a much longer term hold. So I put a number in my head, how low I think it could go, and then I really don't worry about any number above that. To me, that number has been $1,600 for a while now. And honestly, it could go below that. Over the short term, at least, I still wouldn't lose much sleep. Now, I wouldn't like it, but I know a few things. I think the production cost of gold right now is in the vicinity of $1,300, just below that. And the world is not giving up on its gold fascination anytime soon. So if you want an actual floor, I guess you could use that production cost. Add, I don't know, storage, shipping, retail expense. What would that be? $1,400? Well, historically, the fundamental gold price has been around 50% higher than production costs, so it's well above that if we use history as a guide. That fundamental price right now would be about $1,850. So there does appear to be a trend for gold right now. It has dropped below support lines, and there doesn't seem to be a bunch of central bank purchases coming in, taking advantage of that dip. So if you had to pick a direction, you'd probably pick down. And there are also unknowns that could push it down further, but there are also a lot of unknowns that could turn it around entirely and send gold price back up. One of the biggest factors that analysts have used saying that gold is on its way up is Fed policy. And that's the reason all those predictions for $2,100 for gold in 2023 were around, and also why they've been wrong so far. There's just been no call for a pause coming out of the Federal Reserve. There's been no policy reversal. And those events that the analysts have been mentioning, they're still on the horizon though. They just aren't coming soon. So this isn't a case of the football being pulled away from Charlie Brown at the last minute. It's a case of the football just being kicked downfield a bit. So I touched on this earlier, but Treasury yields hit their highest levels in 16 years, and that's kind of a boring topic, but it's very important here because we know by now just how big an impact those yields have on gold price. I don't think it can be overlooked. Gold's recent movement, it's not mysterious. I think that's the point here. We know why it's gone down. Analysts are in the same boat. UBS just cut its year-end gold price forecast to $1,850. It's down from $1,950, but they're also continuing to recommend a long position. They say they expect a recovery. I think most of us probably do. What we're back to is just waiting to see what the Fed is up to with rate hikes. And until then, I guess I would rather be able to buy gold at a discount than have to continue feeling like I'm buying at a short-term high. The dream is always going to be to amass a stack when prices are low and then just sit on it while the prices climb. Sit on it in your luxury yacht that's moored just off your private island. That all depends on how long the dream lasts. And I think private islands are a pretty good place to call it good here. So let us know what you're up to. How low do you think gold can go? Are we there yet? Are you already buying? Or are you waiting? Let us know. And then while you're in the comments, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you'd like to see more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.